Okay, everyone, welcome back to another episode of our podcast. I believe this is episode 14 or 15 at this point. On this episode, we have Scott Burke joining us. He and Chris have known each other for many years. You've probably seen him on Facebook, Fex Contracting, and a number of his agents are also online as well on the forums and other places. So, Scott, if you want to introduce yourself, that would be great.
I'm Scott Burke. I'm out of Southern Indiana, Evansville, and glad to be here.
So, Chris, if you want to go into some of the topics that we'll be covering today on this episode, that would be
Yeah, absolutely. So I had a couple in mind that I thought would be fun for the general public's consumption. A little bit about the developments and reflexive underwriting and changes you've seen through the KSKJ product. And then we'll talk a little bit about selling the best thing on the market, because you guys have kind of pioneered an agency on being ultra aggressive in product and pricing, where many other agencies have built their product, their core around maybe more non-competitive products. So let's start off by talking about the new KSKJ product and how reflexive underwriting is kind of changing the industry.
Yeah, the KSKJ product had changed with their e-app. When the new e-app came out, their underwriting is different than the paper app. You know, the paper app, you could look at it just like most filing expense products, tell the yes or no questions and tell right where they're going to fall. With the e-app, it's less predictable, but fortunately, it's falling mainly in the agent's favors. We're getting way more cases of agents that are doing apps and they think they're going to go standard, and it goes preferred. And it's just a little bit unpredictable right now, but you just really have to do the app and see what you get. And if it doesn't come up favorable results, you might just change companies. But it's going really well. It's probably not perfect for your software, the Toolkit, that is kind of falling into gray areas, but it should get better once they get it lined out and forward exactly the way it's going to stick. Then probably you can update Toolkit and be more predictable with it.
Yeah, that's something that we mentioned before. Whereas like companies still care about, as long as they care about persistency, they can't make it a, we hope you get it approved, because with most companies, if you dip below 70-60%, it still costs them what I think Prosperity said $92 an app to process. Maybe the reflexive app is a little bit lower, but it's still a little bit pricey to do that. So I think that you still need some kind of, because the agent still has to sell the policy. You can't tell the client, we might get you this premium, we might get you this one. We're just going to submit it and see what happens. So I do think that over time it will improve, just like we've seen with Americo does the same thing, Pekin, Great Western, and they're all relatively predictable. So it improves over time.
Yeah. The majority of KSKJ agents right now are kind of leading with them. The guys that are writing much business with them, they're leading with them. So they're kind of just going with them. If it doesn't come in preferred or standard, then that's when they'll look for elsewhere. But that's kind of what you have to do with them right now. I mean, if you're just kind of looking to see if they'll take a case, they're not predictable enough to really stick just those type of cases with right now. You just really have to kind of lead with them or not really depend on them right now.
Yeah, I've seen relatively consistent. I like to know before I go, and if I know that it's not going to take it the way I want, I'd rather know in 10 minutes and place it elsewhere. So
yeah,
even if it isn't exactly the result I had hoped for, if it says no, then it's just as easy to load a new application and write it with somebody else. So the ease of use, the fact that the application takes 10 minutes maybe, allows you plenty of time to pivot elsewhere. I was joking with Eric Hamada yesterday. Eric was on our podcast a few weeks ago, and I said, Eric, I can finish a KSKJ app before your agent could open the Mutual of Omaha application.
That's true.
And they
really have it down. It's really good. What's so funny is when they brought out their first e-app, which was about a year and a half ago, it was the worst thing you've ever seen. It was unusable. And, they've always had a pretty high policy fee that was non-commissionable in the past. And they rolled it out to our agents. And they said, if you put them on the e-app, you get paid on the policy fee, which was a nice perk. Even with that extra $60 on every single app, our agent said it's not worth it. We're not going to do this e-app. It was that bad. And for them to come back the second time with really the best one, I think, out there, it's a fantastic turnaround for them.
Absolutely. So we wanted to also talk about how you've kind of built your agency around selling ultra competitive products and how many other agencies really didn't take that approach, but how you've kind of really mastered that and how that might really benefit an agent that's watching this podcast.
Well, I've always had two mindsets that a lot of people in the industry don't have. One of them is, this goes way back. I've been an agent for 25 years, and my mindset has always been, I'm not a great salesperson. I'm just average at best. So I'm not going to sell somebody something that's difficult. The easiest thing to me, everybody we meet with, they're wanting to know if they can get a better deal than what they've already got, or if they don't have anything, they're looking around for the best price they can get. Now, when we say best price, you don't have to be to the penny the best price, but you have to be in the lower end of the scale. In my mind, some agents will tell you the opposite. They'll say, I can sell the highest thing out there all day long. I've never been that guy. I've always needed to have a real competitive price. And when everybody's telling you I'm shopping for the best price, it's easy just to target getting them a real good price and make the close. Plus, your persistency is so much better. People will tell you on Facebook that if you sell by price, you're going to lose them by price the next time an agent gets in the house. That's absolutely not true at all. If you have a good price that you put them with, there's very few people that are going to come in there and beat that price. And if they do beat it, it's by such a little amount, they probably won't want to go through another app and do it. Wouldn't be worth it. If you sell a real high priced product, that's going to get beat on price consistently. Or if you put them with a product that they don't fit with, if you put them with a graded because they have COPD, and anybody with Insurance Toolkit can put them with a first day coverage with COPD, that you're going to get replaced on that stuff. And so we've just always, from day one we started our agency, we tried to have available the really competitive price companies, as well as all the other companies too. There's needs for them at times, but we have the real competitively priced companies, and we teach the agents how to underwrite properly. We give them all a copy of your product. We put all the agents with that. Some of them use it, some don't. Some of the really experienced agents have done it without it for years, and they're slow to adapt to new technology. But the new guys, it's a big plus for them. But if you put them with a product that gives them first day coverage, if at all possible, and then get them with a company that is in the lower end of the tier on price range, it's just easier to sell and it stays persistent. But the other thing that I've always had in my mind that most of these agency owners don't have is I never wanted real rapid growth. I don't want 1 million agents coming on every month. I just want a few guys, because we really do train them. We follow up with them. We want to make sure that they're making money and that they're getting, if they can get going in the first few months and make money, then they're going to be pretty maintenance free most of the time going forward. But if you just keep bringing in just an avalanche of agents every month, you can't really train them and you can't really follow up with them. And that's why so many agencies will tell you there's 70 or 80% of the agents getting the business failing out. I've never experienced that. We have just very low numbers that fail out with us.
Interestingly enough, one of the reasons why agents don't fail out with you is you hold them to a pretty high standard. I think that you expect them to get on a lead order. You expect them to continue to purchase their leads. You expect them to commit to contracting majority of their business with you. You expect them, you have a system that if they work, it works. But a lot of other agencies or recruiters will accept the fact that, oh, the guy's not going to be on leads, and forget the fact that if he isn't going to work out. So
I screen them out if they're not going to get on a lead order, and they don't have to buy leads from me, but most of our agents do buy it. We've had a good price on a set cost lead program all these years. So most of them do buy into that program. And we've got guys that have been on it for, 7 years straight, never gone off of it. But if somebody calls me, and I get these calls all the time, guys wanting a contract, they see our commission levels and things, and I want to pick it up. If they start talking recruiting their buddies and they've never had any success of their own, they've sold a few policies here and there, but they've never really gone out and won any conventions. They've never had a $250,000 a year off their own personal production. I just tell them, we don't want guys like that. We don't want recruiters that aren't ready to recruit. when you recruit with us, you have to work your way up beyond the entry level commissions, which with us, the entry level is pretty high commissions. But you got to get up above that so that you can give the guys you're recruiting the entry level commissions. You don't give them a shaved down commission just because you got here first. We've never believed in that mindset. So that goes with, we don't want every agent. We don't want millions of agents. If they are not going to get on a lead program, or their mind is all about recruiting rather than on selling insurance, we just screen them out. We don't want them. The other thing that I hate to do, but I do it all the time, is if I have a good agent that wants to come on, he interviews real well, everything seems good with him, but he's right where I already have another agent. And, he doesn't want to drive way out of his way. Sometimes it would make sense for him to come on with us. If we've got a guy working right in his area he wants to work, we turn him away too, because we don't stack agents on top of each other. We want all of our guys to have a territory that they work, and then we have very few agents that have any overlap of territories. And it's hard to do that, especially if, in the beginning. It's just Murphy's Law that you get people that want to come on there in the same place you already got a good guy. But if you just build your agency that way, where each guy has got his own turf, then all your agents work together, because our guys all communicate daily. I mean, they all know each other, they all talk. And if you have guys right on top of each other, they just get desperate. They try to flip each other's business. Sometimes they start out not wanting to do that, but it ends up happening, or you're putting out fires all day long. You're just messing with people that are mad at each other. I've got two agents that I didn't even realize when I put them there that one of them was kind of on top of part of the other guy's territory. And I thought these guys are both real mature adults. I'll make sure they know each other, and they get along real well. It lasted about a month. I mean, one of them got in on another guy's deal, and it just they were mortal enemies immediately. And I just figure agencies that don't make those territories like that, they're just dealing with that all day long.
Absolutely. Joe, anything you wanted to throw at Scott? I mean, Scott was one of the pioneers to bring his agency onto your platform, and has really seen, I'm sure, improvements in persistency and placement just like everybody else. So I won't hog the mic. If Joe, you want to throw a few questions to Scott.
Yeah, and we do appreciate that, because Scott was one of the first people to use it before we got all of the traction that we got over the course of 2021 and this year. But I do think the comment on selling based on the competitiveness of a product is important, because there are people who sell captive products that are super expensive. But I think if you look at what is the average persistency of a senior life agent or a Lincoln Heritage agent, it's not going to be where it is if you're selling competitively. It doesn't need to be bottom of the barrel, but it's something that might be 15, 20% or more lower. And I always thought the argument of a lot of these captive places, well, we sell on value. And it's always this nebulous, sometimes like this funeral program. I never understood it when I was in the field. And frankly, it never mattered to any client I sat in front of. If I could beat their rate and get them $20 off a month, they didn't care about whatever value potentially was in their policy. So maybe some people out there really do sell on value. To me, it's always been pretty commoditized, where you want to have a company with good customer service, agent support that you like, approves the business as you key it in. The rate reflects, if you have someone with COPD, of course, it's going to be a little bit higher than someone who doesn't. But that's the way that I always sold, because I didn't consider myself to be a great salesperson either. So I sold products that I thought were competitive, ones that clients could afford, and ones that, unless there was someone selling KSKJ or something, that it's not really realistic that an agent could come behind me and replace. And again, most clients aren't going to move for $1 or $2, even if they can get that. So I do think that it's good to point out that approach works, because a lot of agents can flock towards I just need to generate as much commission as I can and sell the highest priced products, when I don't think that's really a long-term, for most people, it's not a long-term strategy for success to do that. So,
yeah, we all know when we go in a house, and if they go to get their current policies, if they come back and they've got, one of the old Oxford policies, when Oxford was about the cheapest thing out there, or they've got, something really competitive, you kind of grit your teeth. Oh boy, this may be tough here. If they come out with certain companies, I don't know if you want to name names, but you just did the Lincoln Heritage for one. If they bring that policy out, you're excited. I mean, you just know you're going to close this sale. It's very rare that you're not going to be able to tear that thing right apart. It can be a 7-year-old policy, and you just show them go with reduced paid up on what you got here, take out additional coverage and have a lower premium than you're paying right now, or take money back and have a lower premium than you're having right now. And you can just do it over and over and over. So how in the world could those policies be persistent? I mean, I'm sure they have some persistency or they'd go out of business. But I mean, as far as the ratios of persistency, all of our agents that earn the convention with KSKJ, their persistency is in the 90s. They require you to have 85% persistency to even go to convention. But almost every single one of them are in the 90s. Some of them are 95%. These guys are writing big numbers. You'll never see a Lincoln Heritage agent having that kind of persistency. I've had a guy called me not too long ago. He was supposedly, you never know when people start talking this stuff, but he was supposedly like the 11th highest producing Lincoln Heritage agent in the country. And he'd been doing this for 15 years or something like that. And he's talking, he's liking what he hears with us. And then he tells me about he has a Vector. He goes, now, is that going to cause me a problem? Well, yeah, you need to get that cleared up. How much is it? It's $850. Yeah, you want to pay that off before you change over, and that way you won't have any problems. Well, I'm on a payment plan. I'm going to get it paid off over the next 4 months. Well, if you're the highest in the top 20 Lincoln Heritage agents in the country, and you can't pay an $850 Vector off to move forward with your career, something's wrong there. And
Yeah, your lead deposit's not going to clear next week.
He's not got any persistency. He may have been BSing about even being that high in the rankings. You know how guys do. They talk. But he supposedly had been with Lincoln for years and years and had done real well with them and had no money. He didn't have any, he couldn't rub two nickels together. That comes from bad persistency. If you sell a company and you're in the 90s, and unless you're just spending way over your head, you're not going to let an $850 Vector set you back from anything you want to do.
Yeah. Joe, I'm sure you and I and Scott all sold that old Aetna product before the e-app and with the phone call. And every time you'd sell it, Joan would call you and say, thank you for your business. That product has some oddly good persistency too. But when you think about it, it was a very competitive product. The rates were drastically lower on the 7-year-old females. The tobacco rates were fair. The underwriting was liberal. Like some of those products that we sold stuck simply because the next buffoon in the door couldn't do anything about it.
Settler's Life was one of the first companies I got contracted with in like 2016. And that was one that I remember was pretty competitive. But at the end of the day, I mean, there's agents that, again, can go captive and be successful with that. That's not something I've really personally agree with, to the point where if you're with one product, there's only so much the company can do, because they have to be more lenient on some things to be stricter on others. And if you have to take everyone, you're going to have to be, basically, the analogy I use is it's like a size 13 boot where everyone's going to fit in it just about, but no one's going to be that comfortable because they have to basically accept everyone. And that's something that I feel like is a huge advantage to all of us in the broker world, is that we have this selection of products. And of course we have our own like lead generation, the way that we all get in front of clients. But I think the products that brokers are able to represent are much better than what you see on TV or what you see a captive agent represent. And not to say you can't get good training and whatnot with the captive route, but you're not going to be able to get the clients the best deals. And again, I don't believe in the value argument. That's something that some people do, not me, but I think that's something that's really great about what we do, is we can get clients really good deals for the situations they're in.
Yeah, the companies like Settlers was a perfect example. They had the most oddball underwriting in the world. And I used to love that company as a backup company. Your product would have destroyed them quicker than what they got destroyed, because basically my cheat sheets killed them. I had the old cheat sheets back before we had your product. And, Settlers was one of my favorite companies. And a lot of agents would write them a couple times. And they just hated them. They were hard to deal with. They were like real backward seeming. But what was beautiful about them was they weren't the same as everybody else. They would take the most bizarre stuff at preferred. They would take Lou Gehrig's disease preferred. Who would do that? They would take mini strokes preferred, which only Royal Neighbors does that. No problem at all. If you had a mini stroke yesterday, you're preferred today. But then you have diabetes. Oh my God, you're going to die. They just thought diabetes was the end of the world. They wouldn't take it. They would put you full graded on it if you had insulin diabetes. It was the most bizarre underwriting. And they had me come and meet with them a couple times their president and their, the head of the underwriting, they had a whole table, 9 people there. And I would explain to them what all their bizarre stuff was that just didn't make any sense. And they'd make notes and they'd, okay, that's fine. They'd make all these notes. Nothing would change. They trusted the guy that developed their app years and years earlier so much. We just think everybody else is wrong. I'd show them all the companies, Mutual of Omaha, all these companies that would take insulin diabetes and not have a big problem with it. And they just thought all those companies were wrong and all those other companies were going to go out of business. Well, we saw what happened with Settlers.
Yeah.
But that's the beauty of your toolkit, is that when you have a company like that that takes the weird stuff, even if they don't take the good stuff, you want to embrace that, what they do take.
I had an agent yesterday or day before out in Nevada, and she placed somebody with GPM graded, I believe. And this person probably had the mortality of a wet napkin, but GPM takes it, paid full comp on it, put the guy in graded coverage. And it's one of those niche situations where not only did she put the client in a better product, but she made significantly more money than where most other agents would have placed that person in GI or been unable to help them at all. So there's a lot of money to be made in the niches of the niches, or the nuances of the products, I guess. Scott, what would you say, a little off course here, but it's a good question to ask a lot of the experienced guests, you would recommend to an agent so that they can make it through the first year, but more importantly, when they make it to the point where they have more money in their bank account than they're used to, not getting lazy, slowing down, and losing themselves right at the most critical moments?
Well, don't leave it in your bank account. Put money back for retirement or do whatever, pay off all your bills. I got my house paid off real quick. When my income shifted and I started making a lot more money than I had previously, I paid my mortgage off in just a couple of years. I wanted to be debt free. So I would work on stuff like that. If you start making money, make sure that you have working capital. Don't put yourself where you're expecting every month to go great, and then you have your first bad month, and then you're desperate. But don't go out and buy really expensive cars and get yourself in debt just because you're on a little roll here. You want to build that up and turn it into a lifetime of fluency, because we do see a lot of agents come in and take off real quick and make good money, and then they go out and get in debt, and then something hits them. Just like right now, we're getting hit with real increased lead costs, and we had COVID hit last year and things like that. You don't know what's going to hit you, and you're going to have a big downturn too. So just prepare yourself for that.
Yeah, I think there were a lot of veteran agents that right when COVID got really strange, they opened up their bank account and they divided by how much their budget is based on how much they have. And they said, all right, I've got a few months before we have a real problem here. And some agents opened up their bank account, they divided it against their budget, and they said, I got a real problem here yesterday. And some agents opened up their bank account and they didn't have a budget, and they didn't know what they were doing. They didn't last but a few days. So being conservative, being smart with your money, operating with low debt, that's really, really solid advice. Joe, what are your thoughts on the future of the business with reflexive underwriting, product changes, increased lead cost? I'm going to throw that to Scott after you, but you can see the industry from a whole different perspective than many others. What do you think the near future looks like?
Yeah, I think we're going to continue to see high lead costs. That's something that some of these internet lead places that we kind of laughed at 5 years ago are still, the lead quality obviously isn't what direct mail is, but it's a viable strategy for a lot of people. So I think that's something we're going to continue seeing. The direct mail, the returns, I don't know what's going to happen with that. I know some areas are fine, others aren't. From what we hear from some of our users, a lot of people are looking for other lead sources. So I think that's probably not going to improve anytime soon. From what I can see, there's no reason it would. For those people like Chris who are on direct mail and are having success with it, obviously that's still the best type of lead if you can get it. I kind of feel bad for anyone who focused on mortgage protection before this, because that's not non-existent, but you're probably not going to find mortgage protection direct mail below $80, $100 at this point, depending on the area you're in. And I remember getting fresh, like brand new week-old direct mail for $32 on a standing order in 2017. So it's completely polarizingly different. And that was in Philadelphia, where there's, no shortage of agents. So it's kind of unfortunate, but I think there's a lot of people who can adapt. I see a lot more people doing their own marketing, which is something interesting. If you can figure that out, it's not something for a new agent to fiddle with, but if you can do that. In terms of the products, I think the companies will get smarter over time. I do think that they will stay somewhat consistent with guidelines because we've seen risk scoring for a long time. It's not something really new. Companies like Great Western are doing it, and we can have guidelines for that. We have guidelines for companies like Americo. But I think the companies, hopefully, I think most of them realize that even if you make your product in a way that you reduce your death claims by 10%, your loss ratio goes down. If you reduce the amount of business you get by 30%, is that even worth it? I would say no. That's why companies like American Amicable Prosperity get so much business, is I can sell them and be pretty confident at the time of submission that I'm going to get the decision that I want, that I underwrote for, based on what the client told me, as long as nothing huge is missing. Especially for a telesales agent, I think we take for granted for in the field, you can pivot without much of a problem. When you're on the phone, you just spent 20 minutes doing an application, even if it's something quick. You got to sell them, get their bank info, sell them on the price, build that trust because you're not there in person. You generally don't have a chance to pivot. I would say most telesales, for most agents, maybe there's some agents who are very good at it, but I would say most agents, if you lose the first option, in most cases, you're not going to get to the second one because you have to pitch something potentially worse. The client was prepared for something better. And a lot of agents do telesales. It's something that's very popular now. So, or even remote over Zoom, whatever it might be. So I think that we're going to see products evolve and change as we always have, but there's still going to be, as long as companies care about persistency and want agents to be able to sell their product, not just say, we're going to apply you for insurance. Hopefully it gets approved at this range of rate. I don't think that's really good for anyone. We can look at the companies that get most of the business. And again, some companies like KSKG are happy. I'm not saying they're not happy with what they get, but companies like American Amicable and Prosperity that want tons of business, they get that business because they're consistent, they're reliable. American Amicable is so great because you can put a note, like something comes up like Restasis and it codes as cyclosporin. You can put a note like, hey, this is an eye drop. They're not in kidney, they don't have a kidney transplant. So things like that, where an automated system might just write it off, and that just might be part of the system. So a lot of those clients who would fall through the cracks on a truly automated system, that's why we have multiple carriers. That's why not, America doesn't get 100% of the business. You have other carriers where you could put a note. So like, hey, this is an eye drop. It's not a pill for someone who just had a transplant. Those things like that. But I am glad to see a lot of companies picking up better e-apps. I think basically everyone has an e-app now. I think what Life Shield's like the last one that I know of that might not. I don't even know if they do. They might. I've never heard of it. If they
do.
They do. Okay. There you go. So basically everyone has an e-app as far as I'm aware, which I think is great. Over the course of like 5 years, basically every company got an e-app. So I'm glad to see technology being more used. And when we talk to the carriers, they seem pretty excited about technology like ours that's coming into the industry, technology like Sunfire. So there's a lot more push forward into. We got the CMS API recently, develop our MedAdvantage platform. So I'm glad that there's more of a push in the technology because I really do think it helps agents, especially as things consolidate and there's more competition. You have to be more efficient to be successful than possibly 10 years ago, where you can just put in a direct mail order and if you work hard, you can succeed. I don't think it's that necessarily easy anymore overall. So
well said. I was looking forward to today, and then I'm going to throw the question to Scott, not having to sit here for an hour and a half and fill out KSKJ applications while I watch Star Trek Strange New Worlds. Like, I have an hour I can do other things with because it's just an inefficient use of time to be doing paper applications. To come home yesterday to have written $6K of premium and not a single one of them had to be followed up on opens up, your work-life balance, other tasks today. It's just a beautiful thing. So thank you to insurance companies for catching up with technology and getting us off of paper products. So Scott, what do you see the near future of the business looking like? You've seen a lot of changes, a lot of developments over time. What does the near future look like to you?
Well, as far as things that I'm seeing with our agency, of course, direct mail cost is just really going through the roof compared to what it was. But direct mail seems to be still by far the best lead. I mean, we've worked with all the different Facebook vendors and they work, you can make sales with them, but for face-to-face agents, the fact that they don't cluster, they'll be in too big of an area, your leads are too far apart, you spend too much time behind the windshield. Plus, they don't seem to have as good of income filters on them, so you talk to too many affluent people. Most of our agents, when they're in the mindset of selling final expense, they don't want to have to shift gears and try to sell things to affluent people, and they're harder to sell to anyway. They all have to get, talk to their, what they call their financial advisor, be their Edward Jones rep that's trying to, not let you sell stuff. But anyway, we try to stay focused on the lower income seniors, final expense, and we want our leads to be in tighter areas. So direct mail is really the only thing that works well for that. So with our agency, we're looking at things of doing more with lead credits. I'm working with a company right now to kind of revamp a product they have and have a 15% lead credit, which should be happening pretty soon. Also, I think if I were the agent buying the mail, if you're paying price per thousand, which some of our agents are actually going to be doing, if they're in, we have a few states that the cost of leads has gone up to $45 and even $50 a lead. When it's getting that high, you want to experiment with doing some price per thousand mailings, but you got to get as many returns as you can get. So of course you want your lead card as vanilla as possible, but I think having some, some pulls on it, something, a free gift, people have used the Walmart card for years. I think that's probably overused where it's not as effective. I like coupons to buffets. Golden Corral buffets are big around here with our client base. You can have buffet gift cards. Back when I was an early agent, I did this so long ago, we didn't have the internet or any of this stuff to learn from other people. We just kind of had to figure it out for ourselves. I didn't even know there were mail houses, but I knew direct mail was the best leads. So I went out and bought a big industrial printer, a laser printer from Dell, and had a folding machine. And I'd spend every Sunday night I'd make my own, mailers out with reply cards and stuff them in envelopes. I'd have my kids doing assembly line mail. But back then, to get better responses, I put Fannie Mae chocolates. They had like a little gourmet sampler with like 4 or 5 pieces of chocolate in it. They were about $6. I put a picture of that on my leads as the pull, and I got better response with that. People wanted their little Fannie Mae chocolates. So I would put that on the lead card, get the response rate up. And I always found agents think that makes your lead real weak. Well, it does weaken the lead. But if you're a good agent, if you can get in the house and you have something they're wanting in your hand, which I had them right there with me, all I have to do is just present to you what we do. We compare our rates to what you're currently paying on, if you're paying on anything, and you don't have to buy anything. That way you just have the knowledge of whether you have a good deal or not currently, and you get your free chocolates. And it was a good lever to get them to get their policies out, let you review them. And a lot of these people thought they were just replying to get that little free gift. I don't even know if you can buy those that cheap anymore, but they get that little free gift is the only reason they sent that card in. And all of a sudden you're showing them you can save them $15 a month on what they're already paying on. Well, this thing only costs $4. You're going to get $15 every month for the rest of your life. So, a good agent, if he can get in the house, he can close. So I just think we have to get creative at having things that will lift the response rate on direct mail, and then hopefully work with some rebates to the agents for what they're paying for their direct mail, and hopefully keep that going.
I like that. So we're going to wrap up. We always like to keep these within a 30-minute period. And before I go, I want to remind folks to like, comment, and subscribe. We're going to let Scott promote himself before we close this out, but YouTube loves it when you comment below. YouTube loves it when you like the video. And if you subscribe, it gets this video out to other people who may not be searching for us, but are searching for unbiased insurance content. So appreciate each of you guys as you interact and help this channel grow. So Scott, promote yourself, tell the audience who you are, where you're from, and if they want to get in contact with you, how they'd be able to do so.
Well, our agency name is actually National Underwriting Service, but everybody calls us FEX Contracting, fexcontracting.com. And that's our website. And that's really where the word FEX even came from. Before that agency, FEX wasn't around. But we've been around for 9 years now, and we are always looking for agents, but we want agents in specific areas. Anybody that calls me, though, I'll be upfront honest with you about, even if we're not bringing you on, who the good places to look at. I have agents all the time that I can't bring them on due to maybe an agent already in that territory, and I'll send them to guys like Chris or other guys that I know they're real reputable in the business and keep them out of the clutches of the bad choices. So it never hurts to call me. Our toll-free number is 800-673-5309. and we're always happy to talk to everybody.
Appreciate it. Thanks for being on. Again, appreciate you guys watching. Like, comment, and subscribe, and we'll see you again next week.
Thanks, guys.